I'm about to tell you the best current momentum stocks within the US market. These are stocks in which can be traded and hopefully momentum carries the price up for you, so all the hard work is essentially done for you. But of course it does go to a much deeper level than that, and you do have to consider intrinsic valuations, and that is exactly what I'm here for. I'm going to be showcasing to you the top few best momentum stocks. We're going to be looking at their actual momentum, and we're also going to be comparing their momentum to their valuation to see if this is a sustainable growth, and if you do put money into this stock, if it will carry through and you will see positive returns. So again, this week we have seen a massive amount of momentum within the US markets as people are starting to buy in and the markets are now starting to bounce back. Everything in yellow here is a potential stock in which can be momentum traded. It goes off factors such as moving averages, difference between different days. We have volume compared to the normal RSI. Ignore this top stock here as the RSI has broken, so it just defaults to the top. We have the average true range and of course the PE ratio. So currently right now the top 5 stocks according to my momentum system is Hims & Hers, Charter Communications, Microsoft, IDEX and Netflix, but that doesn't actually mean to say that these are the best stocks, especially when you look at the volume difference here. It doesn't look to be something in which can be that sustainable, so we are going to be comparing these and some other stocks to their intrinsic valuation formulas to see if they are over or undervalued and if this is a sustainable momentum stock to be trading. So to start this off, let's start with the number 1 position, which was last week Palantir, but now is this week Hims & Hers. Let's see where exactly we can expect this stock to be heading based off of its momentum and valuation. So just looking on the breakout system here, we can see a 20-day difference of 89%, which is absolutely massive. It could indicate that this could be the end of this momentum. We've seen it fall yesterday by 1.81%. It's above its 50-day moving average by 39%, and we have seen a lot of volume within Hims & Hers recently. The RSI is low because currently, as of recording this, it's before market hours. The average true range is in a good position. It's definitely a volatile stock, but we are seeing this stock does have a very high PE here, all the way at 74, so that could indicate this stock does look to be overvalued just on face value. So yesterday I was watching this stock quite closely. It was very volatile. We saw it fall down, climb back up and fall down again after market hours. It's in a relatively positive area for the RSI as it's fairly bought at the moment, and it is of course in a long position quite significantly on the MACD, indicating that there is still potential momentum within Hims & Hers, but how much longer we can expect this to last for, I'm not entirely sure. We are of course above all of the exponential moving averages, but on an intrinsic valuation formula, what can we see? Well, looking at my historical valuations for Hims & Hers, I have actually downgraded Hims & Hers within the last month. Previously, I had a bullish valuation to be set at 66, but now I have it only set at 43, and I had a bearish set at 34, and now that's only at 23. And in 9 years' time, this stock, based off of its free cash flow, should be set at $143. So that indicates that we're definitely in overvalued territories right now, with the current price being way up in the $50 range. But one thing in which isn't actually accounted for within my recent intrinsic valuation formula is this recent news of a massive global expansion, which is utilizing AI within healthcare, which is just going to be absolutely massive for Hims & Hers within the future. I don't think that analysts have actually accounted for this within their growth rate currently, because this is very fresh news, as they are actually still expected to grow without this news a whopping 32.39% year over year. And when they're beating analysts' estimates significantly, I think it's fair to say that they are going to continue to do exceptionally well. So they could still be relatively undervalued when you account for this news, but it's really hard to say. Momentum alone could definitely carry through for Hims & Hers. It could be something in which could go absolutely parabolic, and especially when they're expanding globally, it's something in which people see and they buy instantly, as when you expand from a US market to a global market, you already have great brand recognition, so people are more likely to use your products. And especially when your retention rates are so good, Hims & Hers is just going to do exceptionally well. I'm keeping my hat on today because I have got bed hair. It's very early in the morning for me recording this because I like to get these done early. So now let's move on to the next stock. And I think despite it not being in the top 5, we're going to be looking at SoFi. SoFi has seen a lot of momentum around its earnings release here, but it did actually see an abrupt sell-off despite a triple beat. SoFi has done incredibly well, and they are now above all of their exponential moving averages. If we look here, we can see on a breakout formula there, 24% up on a 20-day difference, 2% on a 1-day. They're just below the 50-day moving average according to this system. They're down on the volume, but that's because markets aren't open, but they are relatively overbought on an RSI. But again, their PE is only at 31, indicating that they do look potentially undervalued. And if I do scroll over to my valuation for SoFi here, you can see that I definitely have them to be undervalued. I recently upgraded them from $118 to $146 on the high side, and on the low side I was at 90, and this actually was a downgrade to 74, but that could be because AAA bond yields were increased, which obviously have a strong effect on SoFi. As you can see, I'm going to quickly go through this. They are doing absolutely phenomenal on the retention rate. A liquidity ratio could be better, and their free cash flow could also be better, but for an intrinsic valuation, I do definitely have SoFi to be undervalued. But on a discounted free cash flow, because their free cash flow is consistently negative, there is actually no significant amount of growth, and so therefore I can't carry out this analysis. With SoFi's vast product diversification, I think it's fair to say that this is a relatively safe investment within the financial world. As far as fintech goes, I don't think there's a better stock in which is poised for more growth, in my opinion. Of course, I do think this is a great stock, and despite me saying I want it to go up, I really don't know if it actually will. I do think it is a great momentum stock, but I think it's too early now to actually decide if it is something which is a momentum stock. We are in a long position on the MACD, but ideally we want to see similar results to what we saw back here starting in August of last year. I think right now it's too early to tell whether or not we're going to see this, and of course we're starting to spike on the RSI, but not massively, so it's hard to say. It's something in which I can recommend for a long-term buy-in. As far as a momentum stock goes, potentially, but it's really hard to say at these levels. Whilst we're here, I just want to do a quick shout out to Keg. This was my top pick for last week's video, and it did exceptionally well. I think it's up 10% on the week now, so I did actually call that very right. If you do want to see this video, it will be above my head here where I did last week's momentum stocks, but I'm not going to go over Constellation Energy again because I've already covered it. So I do think it is going to be a good momentum stock for next week, but I do not want to include it in depth in this video. So for now, let's move on to Charter Communications. So from what I've seen so far, Charter looks to be my favourite pick for next week. So who are they? They are a leading American broadband connectivity and cable operator serving over 31 million customers across 41 US states. In recent developments, Charter has been focusing on expanding its mobile services and streaming offerings. The Spectrum mobile service has seen significant growth, adding over 2.1 million lines in the past year. Additionally, Charter has introduced the Xunium, definitely said that wrong, streaming service. This is a device which is co-developed with Chromecast, and it integrates live TV and streaming apps, aiming to recapture video markets all in one place. So on a momentum scale, they are looking to have a lot of momentum, but on the RSI, they are looking to actually close up here into a potential overbought territory if this momentum continues. We are actually well into a long position on the MACD indicator, and on a exponential moving average, we are of course above all of these. So let's quickly go over what we can see for this company. They have an amazing retention rate. Their liquidity ratio is pretty bad, in fact, very bad, but they do have a very good free cash flow. On a moving average here, an exponential moving average, we are now just above this, which could indicate we're either going to see a lot of pushing pressure or we're going to see us fall back down to it as if it's gravity. And here on a probability theory, we can see 51% of days are positive and only 26% are negative for this company. And this is where I really like this company, is on the valuation. Looking here on a bullish side, I have an intrinsic value set at $1,400 with the current price only being at $400. That's a $1,000 increase. And on the right side here, the bearish side, I have a formula set at 797 with the current price of course being at 400. It looks to be massive returns out of this company, as they currently have a growth rate plus a surprise rate of 17.26, and the earnings per share are currently at 35. Furthermore, Peter Lynch's valuation yields a result of 3, indicating this is very undervalued, which for Peter Lynch's valuation is incredible. And here, looking at my own formula, in which I'm showcasing here for you for the first time, this took me a long time to develop. I have an intrinsic value set at 1,444 with an acceptable buy price of 1,000 and the current price being at 400. This is obviously a great buying opportunity for this stock. Even long term, depends if you're looking momentum or long term. I think this stock's good either way. Basically, what my formula shows here is earnings per share, PE, average free cash flow on a quarterly basis, shares outstanding, growth rate, retention rate, probability of a positive day, negative day, dividend yields, current price, and the WACC, or otherwise known as the discount rate. And essentially, after a lot of number crunching, I came up with this formula, and these are the valuations in which I'm getting. And it is relatively similar to Graham's formula here, but I think mine just accounts for more variables, making it maybe a more robust formula. Let me know in the comments what you think about this. Moving on to a discounted free cash flow analysis here, we can see that in 9 years time we can expect this stock to be worth $720, and this year it should only be priced in at 80, indicating it is definitely overvalued on a discounted free cash flow formula. But if you want to see a summary of all of the results here they are for your amusement. So I think it's fair to say on paper this stock should go absolutely parabolic, but will it have enough recognition for this? Potentially not. I do think that could be its factor in which will definitely halt this stock, as it isn't actually that well known within the US markets. It's not like people see Palantir, they're like, oh, it's going up, I'll momentum trade it. They're going to see Charter Communications and be like, I don't even know what that is. So it could definitely be something in which can't be as well momentum traded as stocks like Palantir, which we will get onto. But in my opinion, this is definitely my top pick for this week. And as I did just say, Palantir could definitely be a stock to momentum trade this next week. I'm not going to go into a deep analysis on Palantir, but I have them to be massively overvalued on a intrinsic valuation formula. So it's definitely not one in which I can recommend for a sustainable growth. But we did see a massive sell-off last week as their earnings weren't as good as people would have expected. It definitely slowed down as they basically only just beat estimates, whereas normally they would absolutely walk them out of the park. So I do still think it's definitely one in which can be momentum traded, and I do have a position in Palantir, but I'm not. It's something in which could sell off very quickly, but it's just one of them weird stocks that you really can't place a bet on. So because I'm time conscious, I don't want this video to go on for too long, I'm going to end this video here. I hope you have enjoyed this video and you've learned about some momentum stocks for potential trading next week. I'm not a financial advisor, none of this is financial advice, and this could all definitely go tits up. This is just what the current formulas are recommending, but it doesn't mean to say that's what is going to happen. If something comes out, say a downgrade comes out for Hims and Hers, it's definitely going to see a sell-off, or if an upgrade comes out for a random stock, that's definitely going to see a rally. So it's very dependent on a lot of factors, but this is just what the numbers say. Take it with a pinch of salt and do your own due diligence. With that being said, I'm going to see you for the next video. I'm not. It depends if you watch it, but